And joining me now is Peter Cardillo, Chief Market Economist, Spartan Capital Securities. We also have William Boiter, Economic Advisor and former Global Chief Economist at Citigroup. Mr. Boiter, starting with you, from a global economic standpoint, how significant is the risk that U.S. tariffs pose to India's export-driven growth?
Well, it clearly is a material risk. 50% tariffs on just under, I think, 50 billion worth of Indian good exports are really going to damage the affected sectors. Admittedly, not all exports, goods exports, are affected by the latest 25% increase. And in addition, of course, Indian services exports to the US are not affected either. But the labor-intensive export sectors for goods are definitely in trouble. They have to find alternative destinations for these products, which are no longer competitive with the 50% tariff imposed on them.
Okay, Mr. Cardillo, would you say that India should wait and watch as India has done so far? Or what will be your advice to the, the strategists here in India, because they are, of course, calculating the short term and the long term consequences of this move. There is this sense that perhaps these tariffs could also escalate given the global tensions. What would you be telling Indian, policymakers right now?
Well, let's say up until now, India, I think, has drawn a red line in terms of autonomy and on oil purchases. Of course, this is not likely to carry on for much longer because Trump has certainly imposed tough tariffs on India, and that means that if the longer it takes for the Indian government to reach an agreement with Trump, jobs are at risk and the economy is at risk. So I think, the fact that Trump is playing hardball and the fact that the Prime Minister of India is also playing hardball, that will probably lead to some sort of a agreement. I don't think that India can hold out too much longer without having negative effects on the economy, and of course the loss of jobs, which is, a real pearl in terms of the Indian economy.
The government of India's response in countering this global protectionism certainly is what the Prime Minister says. He says that it is about make in India, make for the world. So it's about self-reliance that he is now emphasizing on. Peter?
Well, is that directed to me?
Yes, please, go ahead.
Yeah. Yeah, there's no doubt that we had an about face here. At the beginning, we saw Prime Minister Modi and Trump. They were like great friends, and then all of a sudden, there was a turn in action, and that's because of the fact that India has held out. So to a certain degree, I think we have to applaud the Prime Minister of India for trying to, keep its autonomy and basically telling the United States we can trade with whom we want. The question is, will he be able to make trade deals with China or with Russia regarding oil, or is it going to be too late? My guess is that, like I said before, some mutual agreement has to be reached, and it can't go much beyond another month or two without having a real negative effect on the Indian economy. And I kind of suspect that President Trump knows that. And at one point or another, he's probably going to make some sort of an effort to get the Indian government back on track with some real solid and significant talks.
Yes, you know, it is about de-escalation from here onwards, but it remains to be seen who makes that first move here. So, Mr. Boiter, how might these trade tensions reshape global supply chains and India's position within them?
Well, clearly, if the current tariffs persist, would lead to a redirection of global supply in the US, and not just to other industrialized countries, but into other parts of Southeast Asia, Latin America, and all that. But I think it is possible that the Russian sanctions will be lifted either because, and this is unlikely but not impossible, there is a peace deal between Russia and Ukraine, or I think is more likely if India gives in and stops its companies from purchasing Russian crude and other things. That I think is the most likely outcome, in which case the tariffs would go down to 25.
But Mr. Boiter, why should India compromise on its autonomy and its sovereign call to decide who they want to purchase oil from?
Well, it's a cost-benefit analysis. You have to ask yourself, what is the cost of to the nation of importing Russian oil? And also, I would say through that, supporting the Russian war effort in Ukraine. I don't think that there is a huge amount of national prestige and Indian national security tied to its continuing its purchase of Russian oil. It can be given up, I think, at low cost.
All right. Thank you for joining us, Peter Cardillo and William Boiter, on the show tonight. Of course, the tariffs kick in, and is there a plan in place? The indication from the government quarters certainly is that yes, there has been an emphasis on Atmanirbharta, or Make in India, make for the world. That's all from me on this edition of NewsTrack. Thanks so much for watching.